What's up, guys? What are you doing? Having a good day? Decided to hop on the stream. I have a lot of people asking some questions about, SDC earnings. What do I think? How did it go? As well as RVLV, and kind of talk about the whole market today. So, what I normally have been doing is trying to, shoot a video every single day, which is really no problem. The issue is, for me, I feel that maybe for some of these more stock market related videos, like specific stocks, it might actually be better for me instead of to shoot a video, actually go live for 10, 15 minutes and do it that way rather than just like shoot a video about a ticker. Like, as I look back at the video I made today specifically about bank stocks, I realized like I should have just went live, like a public live stream for that, and made that video that way, because all I was doing was kind of a live stream in that sense. So this way, if people ask me about that specific topic, it would be easier. So I'm thinking that for some videos, instead of making a video format of me just sitting here on the screen, I'm actually going to just go ahead and do a stream with you guys. Now, the other thing is my neighbor is playing music, so you might hear that. Hopefully not, but we will see. It's not good music either, unfortunately. I am getting an office soon. I just don't really want to do it with COVID. And the other thing is I don't want to put it under my personal name. I want to put it under Capitalist Academy so I can get really good tax write-offs and save some more money, because, I'm not going to pay as many taxes as I have to. So I feel you, Oz. So I would rather wait to get an office till all the paperwork for Capitalist Academy goes through and it's a legitimate corporation, and we can actually get an office under the corporation name rather than primarily my name. So let's get into this. Let's talk about SmileDirectClub. Why did I take a position? What do I think about earnings? Honestly, today I kind of took this position for no reason. I'll be honest. Sometimes I just take positions because I look at it and I'm like, a gamble, but I think that potentially this could be good. So if you guys don't know what SmileDirectClub is, it's basically a company that, is based around. Also, guys, if you haven't already, and if you're new, hit the like button and subscribe. It really helps the channel. But SmileDirectClub is a company that basically sends like Invisalign type products to your house, teeth whiteners off of like UVs and stuff like that. And so from a speculation standpoint, I kind of thought to myself, well, with the whole pandemic happening, with everything going on, it makes sense that a lot of people will be buying these products. Also, in general, I think that with a lot of people afraid of the dentist, with a lot of people not wanting to go as much, with a lot of people rather doing routine things at home, this kind of just makes sense in my opinion. So I thought to myself, we had this monstrous sell-off. We were trading at $16 a share, $15.15, and then we sold off all the way down to $3, and we had this huge push up. So what I was thinking to myself is like, as an earnings play, does this make sense? Like, it's a bit overbought right now. What should we look for here? Do I think I should get in? We had a sell-off, a big push and a big squeeze. You can see here on the TTM, and then we sold off and we touched the 50-day SMA. And I thought, might break, might fade to the bottom. Let's just take a small position. Now, the reason I took shares in this position instead of options, primarily because the implied volatility would have killed me. I'm going to make a video on that next week. What's up, guys? We got 15 people here. Comment. Let me know who you are, because I can't see like I normally can on Discord. So I decided to take shares rather than options because I wanted to be able to hop out of the position. Worst comes to worst. And we had this, huge sell-off as soon as this, earnings came out. It is a losing company. They do lose money. We had this big sell-off, and we ended up bouncing. If you could have grabbed this from lows, we bounced all the way up. That's a 16% move. That's pretty crazy. I was up about $300, still holding the position, down $30, down $43. This is kind of one of those positions. I don't really care. I don't think so. I priced in and expected a way bigger move, and we haven't really moved yet. But as far as shares is considered, I'm not too worried. But let's go over, if you guys have any questions on SDC, if you guys are in SDC, let me know. let me know if you have any questions. We can go over it. What do I think? Hit the like button, comment if you haven't. We got 17 people. What's up, guys? Hope you had a good day. Overall, I had an amazing day in the stock market. Let's take a look, though, at some of the live news coming out about SDC. So let's see. First quarter loss. Here we go. Let me make this full screen for you guys so it's easier for you to see it. So let's see. At 4:09 came out. We can actually go here. So Q1 EPS was a loss of 28 cents. And when they were expecting a loss of 19 cents. So that is not good. They lost more money than was expected. Now, what I don't know is, was the actual guidance given before or after the whole situation going on right now? So that's what I don't know about. David says, got out of my option yesterday at open, was going to ride into earnings, but I guess it wouldn't have been much a move as everyone expected. Very good job, David. Very good job. I mean, like we saw, let me move this down. This huge move. Well, actually, hold on. This is kind of in the way. But we saw a huge move running into earnings. So very good job. Let's check here. So they missed on EPS. That's not good. Then let's see. So sales were $196.5 million, which was a miss because they were expecting $219 million. So a miss, like I said, I don't know when these guidance was given. I don't know if this was before the whole pandemic happened or not, but obviously not too good. SmileDirectClub reports, let me go back up, Q1 unique aligner shipments up 12% to 122,751 units compared to 109,000 in the first quarter of 2019. So that's good. 12% year over year on their aligner shipments is good. A Q1 loss of a share of 28 cents. We talked about that. Q1 loss of $107 million. That's like Uber money that they're blowing through. Uber was like $289 million loss, but that's a lot. And revenue was $183 million. The company has very few fixed costs. Vast majority of Smile shops around the world operate on a month-to-month lease. What else is coming out of the earnings call right now? Temporary closures of all Smile shops other than those in Hong Kong right now. SmileDirect put in place cost management measures, including suspension of most marketing, to position the company to operate at a cash neutral period during this period. SmileDirectClub's earnings loss. Okay, so that's basically the news. They missed earnings. The biggest thing that you're going to want to hear, and the earnings call started already, I don't know what this big move was, is going to be, I know 3 people using SDC for Invisalign. That's amazing for it. I mean, not a lot of people want to do braces. If you're an older person and your teeth are not straight, you don't really want to go get braces at the age of 30, 40, 50 years old. Sagar, what's up, brother? Let's see. Is it going to be $8.50 tomorrow as per earnings outcome? I'm not sure. Eric, I use their UV toothpaste. That sounds pretty dope. So basically, it's going to come down to the earnings call. We talk a lot about, what to look for in an earnings call. Guidance, if they give guidance, is going to be important. So recently, as we've seen with these bigger companies, not a lot of guidance has come out. These bigger companies are not trying to give guidance because I'm telling you, it's going to be terrible. We expect it to be terrible because of the whole situation going on right now in the economy and in the world, but it really depends on how bad. So, the sentiment of the CEOs, where they think the company's going to go, their procedures towards saving cash, because a company like this that loses $107 million a year, that's pretty, a quarter. Just this quarter, they lost $107 million. They are going to have a lot of cash saving procedures. They talked a little bit in those news headlines about how they're, cutting down their marketing and everything. And let's face it, SmileDirectClub is not something that during a long-term recession that you're going to be like, I need. If you don't have money to pay your bills, if you're living paycheck to paycheck, you're not going to be like, I'm going to order a new Invisalign. Or UV toothpaste, as cool as that is. But that's something to watch. If you're somebody in this as a trade like myself, I personally am not too worried. Anytime I take an earnings position, I don't take it with any amount of money that I'm going to be worried about. If I lost $1,000, $2,000, $3,000, if it went to zero right now, I wouldn't really care. It wouldn't be that big of a deal. We're still holding though where it closed. So we're just going to kind of have to watch and see what happens going into earnings. Any of you guys in here actually have SDC? No? All right, cool. So if you have any questions, you can put them in the live chat. The next one is going to be Revolve. Now, for those of you who have been part of my community, part of my academy, part of my life, basically for the past, 8-9 months, you will know I love Revolve. This is a company, I can't believe it hit $17. I'm going to throw up. This is a company that I had going into Q4 earnings. I bought them down around $15.35, and I sold them up around, some of it up around $20. And then I held the rest of it through earnings, and it died. And I got out early. William Lindsay, I sold all my SDC on Monday. Awesome. William, are you new? I don't think I've ever seen your name here. And David. What's up, guys? If you are new, welcome. Welcome to the stream. Welcome to the community. Welcome in general. So, yeah, Oz, right? I had it at sub 10. I love Revolve. Revolve is an amazing company. Some worries about Revolve that I have is the fact that, their average price, their average purchase on the website's like $300 something. A lot of their clothes for women are very, very expensive. So in a recession, how would they fare? I don't know. We're about to go into the numbers. I didn't even know that they had earnings today. I had a couple of my academy students tell me today about it, which is kind of nuts. So I'm really upset. I wanted to get in, around 7, but as the whole market was fading, I was thinking to myself, is this worth it? There's a lot of deals out there. Revolve is a small company. They've been around for a while, but I don't think they've been around since a recession. So I didn't really know how they were going to do. But obviously, this was a good quarter. So let's see. Let's take a look. So let's hop on the 1-minute chart here. Huge push from bottom. We had a little sell-off and then a 31% move. And they actually were positive this quarter, which is probably why they're ripping right now. Let's scroll in. They just aren't going to have any earnings information here. What is going on? Okay, here we go. Wait, why the hell is this look like this? Hang on, guys. Let me reset this chart. Okay, here we go. I was like, what the hell is going on? Okay, so let's back up till about 4:05. Let me get this bigger for you guys so you can see. So let's take a look. Revolve Group announces first quarter 2020 financial results. I gotta look in. I'm getting old. It's harder for me to see. Okay, so Revolve Incorporated, the next generation fashion retailer for millennial and generation consumers, today announced financial results for the first quarter that ended March 31st. So if you don't know anything about Revolve Clothing, it's basically an online retailer, I think only for women. But what makes them so smart is that almost all, if not all, of their merchandising and all of their marketing is from online Instagram models, which is very cheap for them and a very good way to go about it. Kind of like a Fashion Nova, like that type of thing. So this was said, I assume, from the CEO, while COVID, I can't say that word because of YouTube, has created significant headwinds for many companies, including Revolve, I'm very proud that the organization has responded. How the organization has responded, said co-founder and CEO Mike Karanikolas. I'm not even going to try to say that again. Ensuring the health and safety of the employees, blah, blah, blah. I don't really care. Our competitive position in our recent business results gives continued confidence in our long-term future. We began the first quarter with sales for January and February combined increasing more than 20% year over year. That's amazing. To grow at 20% year over year with this whole situation going on is really, really nice. The impact of, I can't say it, we'll say the Rona, led a significant decrease in net sales in the final weeks of March. So I kind of expected that, at least their actual gross revenue on the top line is up year over year, but they're not going to keep that much money. It's going to obviously be down. Importantly, early in the second quarter, our efforts have been helped, and this is good for guidance. In the second quarter, our efforts have helped drive improved sales, trending with sequential improvement in a year-over-year sales decline for each of the past 4 weeks. So sentiment seems pretty good. Why is this happening here? Let's see. So net sales in 2020 are $146,000. That's really nice. Wait, dollars and thousands. Okay, never mind. Gross profit, which is very nice, and gross margins are down a little bit. It's not that big of a deal. Q1 EPS was 60 cents, and they were expecting 40 cents earnings per share. Sales were $146 million, beating $140 million estimates. So a small beat on the top and the bottom line. But in my opinion, I think the reason that this is going up so much is because how they are responding and how sentiment is about the actual company, and how everything, has been moving. So that's really good. If you're in Revolve, congratulations. Is it a little overpriced? In my eyes, yes. If you're a long-term investor, I'm not telling you to get out. But for me, it is a little overpriced at this point. If I look and I say to myself, okay, back in, let's go to the 4 hour. Back in January, before there was none of this, we're worth the same price right now that we were in January before the whole Rona situation happened. To me, that's not fair or true, in my opinion. I don't really think that that's a fair valuation for the company at this point, but that's up to you. Did any of you guys play it? Did anyone play Revolve, or did anyone play SDC? No. I wish I would have. I know some people in the academy ended up playing SDC, but I think that's about it. What else did anyone else have earnings today? Also, if you guys have any questions not related to SDC or Revolve, I can also answer that. Blythe, I got in SDC probably too late though. Maybe. I don't know what time you got in. I got pretty late too. Let's see. What's today? Wednesday. So we had SmileDirectClub. Oh, we had Cisco. Actually, should take a look at Cisco too. We had Revolve. Those are really the only two that I care about, and Cisco. And SDC is just still sitting here sideways. Let's take a look at Cisco. What's the CSCO? Wow. First of all, sold off like 3% today, and then we had a big 6% move up. So let's take a look at Cisco. Let's go to live news, and let's see. Okay, revenue was 12 billion. What is this Q? Why are they doing Q3 right now? Does anybody know? Why are they releasing Q3 earnings? It's kind of weird. Okay, so revenue 8.5. Revenue was 8.5% to 8.5% to 11.5% decline year over year, which is not good. Earnings per share was 58 cents to 62 cents. Non-GAAP from 72 cents to 74 cents. Let's see. Cisco today reported third quarter results for the period ending of April 25th, 2020. Cisco reported a revenue of 12 billion. Net income on a net income generally accepted accounting principles basis of $2.8 billion or 65 cents per share, and a non-GAAP income of 3.4 or 79 cents a share. So I can actually make a video for you guys in the future on GAAP versus non-GAAP. We'll talk about that in a later time. Q4 guidance. So Q4 guidance is not too shabby either. Revenue. We executed well in Q3 in a very challenging environment, delivering strong margins and non-GAAP EPS growth, said the Kelly Kramer CFO of Cisco. The resiliency that we have been building into our business model is paying off, with the software subscription now at 74% of our software revenue, up 9 points year over year. We are focused on driving long-term profitable growth while delivering shareholder value. 95% of our global workforce is working from home, so that's good. That's really good. You could see that with a stock like Activision last week when we had that huge push after earnings. Most of that was actually based from, they had good earnings, but the fact that they said that, almost 100% of all their employees are working from home, which is really good. There's a seamless transition from working at home, to now. Customers and partners introduced a variety of free offers and trials for our WebEx and security technologies as they dramatically shifted entire workforces to be remote. So I assume those numbers are not too good, but I assume that most of this push is from, it's actually fading off now, but I would assume most of that initial push was from the fact that people would be able to work from home and nothing would really change. That's a big issue. That has been, worrying a lot of people. So we don't really have any questions. So that's my thoughts. SDC overall, I would not, we're trying to hold on this 50-day SMA. It's not really the best deal if you're looking to get into this right now. I would not, if you're in it right now, like I am, strictly as an earnings gamble. We'll see what ends up happening. I'm still probably, let's check, down $150 right now, so it's not that big of a deal, but still pretty decent numbers. I have to listen to the earnings call. Revolve still up really big, really good numbers, really happy for that. Anybody who had Revolve, congratulations. And finally we went over Cisco up, kind of fading off now. Not the best numbers, but guidance seems to be pretty good, and the fact that everybody's working from home and nothing really has been interrupted is really good. Drew Down, what's up, brother? When did you get into SDC? I got into SDC at like 3:30 today. Honestly, just as a gamble, just for fun. There was not too much, and I said this to the community, there was not too much that I really was like, hey, I really like to do this. Are you going to talk about SPY? Yeah, we can talk about SPY. Let's do it up, Dredge. I was going to save that, but we can hang on to it. So let's take a look at the overall stock market. Let's take a look at the S&P 500. So sad that I sold my puts. I would have made $20,000 between yesterday and today, but it's all good. Crap happens, So we've been calling out this head and shoulders pattern. I feel like a broken record. We've been calling out this head and shoulders pattern for a long time now, probably a couple weeks. I forgot the word public. Let me post this on the Facebook public group, the Academy group. But we've been calling out this head and shoulders for a bit now. Finally started to shake out weak hands, shook me out. I went in with puts with way too much money. I normally trade about $2,000 to $5,000 in options at a time, and I took a $10,000 option, which is much more than I normally take. And I got shook out. I was down $4,000 at one point, but I actually ended, when I closed my position yesterday, I was only down $1,000. So I was really happy with myself. And if I would have held, would have made a lot of money. But it's all good. So we had this head and shoulders, which is you have your shoulder here, your head here, and then your shoulder here. If anybody doesn't know how to read technical analysis, I highly recommend joining our private community. I put the link in the little chat here, and I'll put it in the comment section. $30 a month. We go live like this every single morning. I go over what I'm trading, what I'm looking at. There's over 55 hours now of content and courses. It'll teach you everything that you need to know. Highly recommend doing it. But we have the head and shoulders pattern, which is very bearish. Now, normally what would happen with a head and shoulders this was a really big resistance, and we actually touched 1, 2, and then the third time back here, broke through it. And this is when technically you would say to yourself, I'm out. I'm walking away. I don't need to take a trade. This is not good for me. But look what happened. We bounced up and then right back down. We had this huge sell-off yesterday. We were holding on the 100-day SMA today, and then a huge sell-off, and we called it. We said it's going to go down to the 200-day SMA. If you don't know different moving averages, if you don't know the difference between timed, moving averages, the 200-day SMA is the strongest, the big boy of them all. So to get through this is going to be really hard. If we get through this, this is going to go down to 260, 250, 240 range. William Lindsay. I have a bunch of Uber, and I know you're a fan, but what's your thoughts on the Grubhub deal, and do you think it's going way up? I'll get to that in a minute. I was actually going to do a whole stream on that, but maybe I'll do that tomorrow. But we'll talk briefly about it now. But we have this huge fade to the 200-day SMA. What normally happens with a Head and Shoulders is we have a bounce, and then we take a fade down. That's what normally happens. Now, stock market doesn't have to do that. Stock market's acting really crazy right now. But we're probably going to hold here. I'd assume we're going to hold here, and we're going to need a catalyst for us to break through this. So if your inputs, and I was telling my academy today, this is the point where you take your profits, you jump ship, or you're fully committed to holding your puts for the next couple of weeks. So let's go over Uber. So William, what do I think of the deal? I don't know if it's confirmed. We'll talk about it a little tomorrow, but I don't know if it's confirmed. If it's confirmed, great by them. It's basically like a monopoly. Me and Oz have been calling this out for a long time. Basically, the reason that Uber gets killed on deliveries is that they undercut everybody. They lose so much money with Uber Eats. And the reason is keep prices low. Right now, keep prices for free. If you order during the whole Rona situation, you're not charged at all for delivery, which means Uber is eating a ton of losses, but they're undercutting Grubhub. And it's kind of like a monopoly. It's kind of messed up because they're just undercutting Grubhub. They're undercutting DoorDash. They're undercutting all these smaller companies who cannot just give stuff away for free. And so they've been undercutting Grubhub for years. And really the big two frontier for me is Grubhub and Uber. Now, me and Oz have been talking, and we thought that Lyft was going to buy Grubhub because that would make sense. If Lyft wanted to compete on the delivery aspect of things, they would acquire Grubhub, they would buy Grubhub, but it doesn't look like they were. So I don't know if the numbers came out for sure. We have a monstrous squeeze happening now on Uber. And what did I say, guys? People in my academy, last week before earnings, I told my academy I had a dream, like Martin Luther King style, but I had a dream that Uber was at $40. So let's see. Let's see if Uber pops up. We hit 35. But yeah, it's really good for them, William. Really, really, really good because it's messed up. You're killing your competitors, and not only from a business standpoint is there one less competitor, but when you acquire a company, you acquire all their intellectual property, you acquire all their software, you acquire all their executives, you acquire all of their everything. So yeah, that's really good. If you're in long-term Uber, that's amazing. I'm a huge Uber bull. I almost sold some yesterday because I don't know. We ripped like 12%, but I was like, you know what? I'm going to sit back. I'm going to relax. I'm going to hang out. So we'll see. We'll see what happens. But I'm going to do I'll do a stream like this. I was saying to a lot of people when we first started that I make a lot of these videos. A lot of my videos are me with a camera, all that. I'm going to continue to do that. But what I might do is just start live streaming some of these videos like this. So it's just easier. You guys can weigh in your options, your opinions, all of that types of things, which will really help. So, all right, cool, guys. If there are no more questions, I'm going to hop off. So congratulations to anybody who held Cisco. Congratulations to anybody who held Revolve. Kind of went over SPY. went over a bit of Uber. I'm going to do that Uber stream tomorrow. And then I'm also going to do, I don't know if I'm going to do a YouTube video or if I'm just going to do like a flashcard thing or something for the Academy, but on basic terminology in the stock market. So we're going to go over that. I have a whole bunch of content. I'm trying to put out 5 videos a week. I'm trying to put out 5 every single day during the week. It's my full-time gig. I'm fully committed to this. So yeah, guys, I'm excited for the future. If you haven't already, hit the like button, subscribe to the channel. It really helps. I also posted the Capitalist Academy link, and I'll also put it if you want to join. Stream again when futures are open. Futures are open now. Or are you talking about tonight? Talk about tonight when they open? We'll see. All right, cool. Yeah, so thank you guys. And until next time, I'll see you. Peace.